Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin, and we're here to get you prepared for the market week ahead. We will be looking at not only the market in general, but we will also be looking at your stock symbol requests. If you want to have your stock symbol reviewed, go to the Q&A box. That is where you're going to be able to put your questions. We love your questions and your symbol requests. Just use the Q&A box. We ask that you only put in one symbol request today because we want everybody to get theirs looked at. So if you can keep it to one on your request, that would be great. If perchance things start to lighten up and we don't get any more symbol requests in the Q&A, then go ahead and you can put maybe a second symbol in. The chat room is for you. I have a chat moderator in the room for you. Fred Wilson is there and will help you keep that chat room going. So feel free to go in there, say hello, tell everybody where you're from, and get the conversation started. Okay, with that, let's go ahead, Dad. I think it's time to dive right on into those charts.
Okie doke. The market went into a bull market last week on Thursday. Friday was a down day, and today so far is a down day. You notice we originally had a rising wedge, the top of which was drawn on this line. It broke out of there, and now it's back into that original wedge. And I've redrawn the top of the wedge, and it's looking kind of like a channel, but it is still a rising wedge. Notice we have a bottom above a bottom and a top above a top, and that's officially a rising trend, and I would call it an intermediate term rising trend. Let's go to, I want to look at the 1 year. Notice we had a bottom in October, which seasonality wise, that's what we would expect. From May through October is a negative seasonality period, 6 months. And now we have 3 more months to go in a positive seasonality period, which goes from 1st of November till the end of April. Let me I haven't looked at this, so I don't know what I'm going to have to say about it. But okay, we had expanding, rising, new highs into the most recent top, and that's a solid reading there. Notice that we had negative divergences twice. This top when we got a pull back, and at this top when we got a pull back. Right now, we're coming off of a top for this long decline here. Notice that we on this one we have let me switch charts on that. Here's our current rising trend, and I should have put that line down there, but rising trend, and it is a rising wedge. Okay, back to our indicator charts. Bias assessment. This is a very important chart for us. Excuse me, Silver Cross Index is a percent of stocks with a 20 EMA above the 50 EMA. We're at 79, almost 80% on that. Now, looking at the potential for going higher, there really isn't. We've got 71% stocks above their 50 EMA and 68% above their 20 EMA. So that's going to pull this number down. That's the destiny right now as we look at it. And this is a pretty overbought reading, so we should be looking for a pullback. On our Golden Cross Index, we have a 61% stocks in the index that with the 50 EMA above the 100 the 200 EMA, 50 above the 200. And looking down here, we do see a potential for improvement because 72%, 74% are above their 50 and their 200 EMA. So we could see this improvement up to perhaps 70%. The short-term indicators, okay, we've got a negative divergence on all four of these indicators. The Swenlin trading oscillator for breadth and volume is the most important ones that we look at. And so we should expect this decline to continue and perhaps to break the rising trend line. Those were the short term. Here's the intermediate term indicators, the intermediate term breadth momentum and intermediate term volume momentum. Volume is compatible with, we have a higher price here and higher high in volume, but breadth is negative divergence on that. So that's not a healthy situation. Let me go back to the bias assessment. I was looking at it this weekend and looking at the near term, say within a year, we can see when these get overbought, we were getting pullbacks in price. And it looks really a great deal like a almost 100% chance of making profits on the upside and on the downside. But if you look back here, this long bull market leg, and the tops really didn't deliver anything on the downside. So bull markets, you really have to go more with your stops than with just the tops on indicators, because they can top and correct internally, but they don't get a lot of downside on the price.
Yeah, and that, holds true for individual stocks. A lot of people don't think about that. I always talk about how I don't want to be involved in a stock with a topping PMO. But, I think you had told me at one point too, is the fact that, well, if it's in a really strong bull market configuration, that these indicators still need to unwind. And so they will tend back toward neutral when they get out of whack, even if the stock is going to continue higher.
Right. So bull markets are different than bear markets. And we need to remind ourselves of that. So I'm wondering right now, are we entering a new bull market? We have entered a bull market. We are in a cyclical bull market, but is this something that's going to persist, or are we going to get jerked around again? We don't know at this point, but certainly we've got out of the 11 S&P 500 sectors, 10 of them have their bottom in October and a higher low around the first of the year. So the market looks strong in that regard. There's so much in the background that it's going to tend to pull it down, but right now it's definitely a bull market, and be careful on the shorts. Okay, looking at the dollar index, UUP, really rallying here. We had a saucer, but it broke down on that saucer. Nice fake out, then it took off and actually is rallying now. That is not good for gold, as you can see. It broke down big time on Friday. Right now, even though the dollar is up right now, gold and GLD is actually holding its ground, and it's up slightly. So that's a positive signal sign. Here's our relative strength line of GLD versus minus UUP. Since they're negatively correlated about 100%, if we put a negative on UUP, and reverse the calculation, we can actually get a relative strength line. And you can see that last week it broke down here, had a nice rising trend for about 3 months. So hoping to see this find a bottom, since I do hold substantial positions in gold instruments. Okay, on oil, breaking, it's been in a declining trend. Looks like we're finding support right around this level. 20-year Treasury bonds trying to trend higher, but it's getting stuck right at this level, and it's pulling back somewhat now. If we look at the 10-year Treasury yield, it's up today almost 3%. Bitcoin, a very nice rally, 56% to this high here, and it's pulling back. It's kind of around the top here. Apple had a very strong move last week. It's pulling back from that. Wanted to take a look at, well, let's just zip through it. There's Amazon. All these tech stocks had nice advances last week, and they're now pulling back. Alphabet, Google, also pulling back to this level of support. Native platforms, I wanted to look at this. Last week, I think it was last week, they announced, I believe, a $40 billion stock buyback. This is probably, should look at this because it's one of the few stock buybacks that makes any sense. They bought it when the stock was down, not when it was at its top, which what a lot of these big companies do, so they can juice their earnings a bit just by reducing the amount of stocks in the float. So Meta is doing very well. It's up 126% from its low back last year. Microsoft, just like all the rest, nice rally last week, and it's pulling back. They're not seeing anything here that's saying everything's going to fall apart. And if it's going to happen, it's going to probably be led downward by the big tech stocks. And I don't see that in the works right at this time. Here's the technology. I'm sorry, let me get the rest of these lists. Netflix still rallying, and it's up 136% from its low, but it's got a long way to go to capture this 77% decline. And NVIDIA, same story, rallying very nicely, not pulling back as much as the others. And then here's Tesla. It's got a silver cross buy signal, up 93% from its low. I think it's being helped by the fact that Elon Musk got a pass on the lawsuit.
I can't remember. The lawsuit, yes.
All right, now looking at technology sector, we do have a breakout and silver cross buy signal, but I guess I should leave those for you.
Yeah, that is kind of the one I'm going to concentrate on today, it looks like. Okay. So that's it. Did we show Bitcoin? I know you always tend to.
I did.
Follow up. Okay, good. I'm sorry, my little doggy decided to bark, and I think I missed it.
Okay, I've got a question here.
Mm-hmm.
Gold trade, is gold having a short-term correction? Is it still intermediate and long-term uptrend? Let's take a look again. Here is the low. Here is the longer-term trend. Let me just from here to here, it's broken that trend. So we have to be careful at this point. If we look at the longer term charts, let's see the 1 year. You see it's broken down. Now this chart doesn't update intraday. It's an in-a-day chart for dollar gold. And let's look at the weekly. So I think we're going to be seeing a little more out of this correction before it stops. I would hope it would get more up here to challenge this, but no, it didn't make that high. So I don't like this. It's the PMO, this weekly PMO is starting to roll over. Don't like that. Okay.
No, it's not a good setup right now.
Yeah, if we're going to learn long term, let's look at the monthly chart. I would say monthly looks good. We still got a PMO rising on the monthly chart. So long term, I'd say it's pretty healthy. And that's all until we get to our symbol request.
Okay.
Did I miss anything?
I don't think so.
An alternative?
I think we've covered it. So I'm going to steal the screen and start looking at the sector charts. So the great thing about the sector charts we have on DecisionPoint.com, you'll find these if you're a subscriber, you get access to all of these with the annotations. So they're set up very nicely. We can see under the hood on these sectors. I'm going to go direct to technology just because you were teasing everybody, and I do like it the most going into this week right now, because we do have that breakout from that longer term declining trend. We're getting the textbook pullback after the breakout, and PMO looks good. It's getting on the overbought side, I would definitely say, but we have seen it reach higher readings before. RSI still positive. I mean, there's a lot of great things going on with XLK, but we can really look under the hood, like I said, and see whether that strength is maybe going to be lasting. Is there strong foundation for this to continue? Oh, excuse me, itchy eye. And when we look down underneath, I'd say yes. I'd say that there is still an opportunity for technology to continue higher. We have 88% with price above their 20, almost 90% with price above their 50. And honestly, I would say a whopping 81.58% above their 200-day EMA. I mean, this sector hasn't seen numbers like this, particularly on price above the 200-day EMA. Well, certainly within the year, we haven't seen anything like this. So I think that it is set up well. Notice stochastics are staying above that 80 level, which really tells you there is internal strength. And then, of course, man, I mean, the relative strength on technology has just been really good all of this year. So I like the way it's set up. I think there's certainly some low-hanging fruit within, and looking as you did at our, FANG plus, as we call it, you're right. There isn't anything that's worrisome necessarily. I mean, I think the market as a whole is worrisome just because of the economic backdrop. But when you look at those stocks that lead the market, that are certainly a lot of them in XLK, and you're not seeing the breakdown kind of action or weakness on price. So I think we can still go higher here. Maybe I'm more bullish than you are, Dad, but
before you leave that, looking at the Silver Cross Index, it's pretty much as good as it's going to get. It can go to 100%, but actually the 20 and 50 EMA doesn't show that. It doesn't show any potential for improvement. The Gold Cross Index got a lot of room for improvement, and with the stocks above the 200 and the 50 EMA, it's certainly set up to make a great improvement.
Yes, absolutely. And, one thing to be aware of too on these charts in particular is that when the sector is in a bull market configuration or when price is going well, you're going to see overbought readings stick around. So just because they've been up here for a while, that doesn't mean that they're not going to stay there. I mean, certainly they could move lower, but if we're going to continue to see strength in this sector, as I suspect we will, these readings can stay overbought for quite some time. So we'll be keeping close eye on this, of course, for our subscribers. And be sure and make your way to the free DecisionPoint trading room on Mondays like you did today so that you can get a finger on the pulse on these sectors. So I'm just going to go through fairly quickly. XLC was really showing the most strength for some time. You can see the relative strength line just continuing straight, but we are seeing a lot of deterioration under the surface right now. Notice that we've lost a lot of stocks above their 20-day EMA, and that is lower than the silver cross, as you were sort of intimating about the technology one. So this isn't going to improve. If anything, it's going to move lower or at best move sideways because we just don't have enough stocks under the surface with their price above their 20 and their 50. So there is a lot of deterioration going on in this chart. It really had a nice move. I think a lot of people took advantage of beat down stocks in this area, but now we're starting to see some deterioration. As I said, could end up with an island reversal situation, although today's action kind of is negating that possibility. XLY was the other one showing the most strength, and it still looks pretty good. Yes, it is pulled back, but like technology, it broke out, and now it's pulling back to that breakout point. And when we look under the surface, we're not seeing quite the same deterioration, but we do have fewer above their 20 than we do above the silver cross. However, we still have more that are above their 50. So this number here could stay about the same, not likely rising, but certainly at least staying at that level that it's at. Stochastics are now dipping below 80. So there's some deterioration under the surface for XLY, but I still think that it's looking pretty good. Now, when you start looking at some of the defensive sectors like consumer staples, you can definitely see the difference as far as the participation. Staples are really looking weak right now. Not only has the RSI been traveling in negative territory below net neutral 50, but it has started to have the PMO turn down below its signal line. That is an especially bearish sign. And although we're holding the 200-day EMA as support for staples, I could certainly see a breakdown ahead just based on the fact that that PMO is topping beneath its signal line, beneath the zero line. So there's a lot of bad news there. Silver Cross, though, looking like it wants to give us that positive crossover, which is a positive. But the problem is under the surface, we don't have enough stocks above their 20 and their 50 to really keep this momentum moving to the upside for the Silver Cross Index. So, while there's some good news as far as the Silver Cross, I think it's good only for the moment. It's not going to last. You can also see fewer stocks below their 50 and 200 in comparison to the Golden Cross. So that means the Golden Cross, as you can see, is already looking toppy, probably will continue. Energy is really in decline. I did your daily 5. I did it last week, and I signed up apparently to do it a week later. So if you wanted to go to StockCharts TV and check that out. But one of the things that I highlighted was the problems going on in the energy sector. And not only is this bad here in the short term with this decline, but in the bigger picture, this is a double top that's forming. And it won't be official until we get a breakdown below this confirmation line down here. But it's looking pretty ugly right now. And you can see that nothing is going on good under the surface. I don't see any improvements going on here whatsoever. So I would expect that this sector is going to continue to lose ground. And more than likely, we will see this confirmed, which means the minimum downside target would take us probably into this gap support area down here. So it's not looking too good here. One thing that you can consider is there is an inverse ETF.
Don't leave it yet. I wanted to.
Oh, I won't. Okay, but I did want to let you know that there are inverses out there, and ERY is one that I've brought to my subscribers a couple of times. And in this case, it's looking like a pretty good play as a leverage, as a hedge.
So I wanted to point out we've got a double top in price. I mean, it's almost an equal double top. And if you look at the PMO, we've got a major negative divergence on those two tops. And same with the OBV, same with the Silver Cross. Golden Cross is too slow to really react there, but the negative divergence is all over the place. So it's not looking good.
No, not at all. So definitely something you can consider. On your daily 5, I talked about another inverse ETF. So if you go and watch your daily 5, you can check that out. You'll find it on StockCharts TV. It should be up there. If not now, it'll be up shortly. I will also retweet it so that you can find that if you want to follow me at _DecisionPoint. I need to tweet a little more often, but I do get all of the important information out to you. All right, XLF, I've been watching this one very closely, but you can see PMO is topping. But I was liking the way that the Golden Cross was reacting. I liked that we were seeing some decent participation under the surface, but we've just not been able to get out of the relative strength declining trend. We really want to get into sectors where we're seeing increased relative strength and not moving lower like that. Healthcare has also been hit pretty hard here. It still does not look good. There are certainly areas and pockets of strength within, but overall, this sector is going to be really hard for you to find your best selections just because the sector itself is really struggling. We have a dark cross that recently happened. I don't know that that was last week, Dad, but it was not too far behind us. RSI negative, PMO topped beneath the signal line, below the zero line. There's really stochastic staying below 50. That's also a sign of internal weakness. And of course, the relative strength for healthcare, just terrible, terrible, terrible. Industrials, looking all right. You know, we're in a rising trend, but we're kind of in this trading range. And I don't like to trade things that are in a trading range necessarily, especially when they're near the top of that range. And, you know, when we look under the surface, industrials are still not showing relative strength. We do have some nice signs here. The Golden Cross is up there. We can see we've had decent participation going on under the surface, but it just hasn't really been enough. And seeing the momentum already shifting lower here for XLI, I was really thinking we were going to get some action out of that sector, but I just don't see it right now. Materials with gold struggling, that hasn't helped. But it is gapped down today. And you can see stochastics really falling off the map and relative strength just terrible here. So not a sector that I would want to be fishing in either. XLRE has been a real surprise to me. And I think it's quietly been doing so well. And I just haven't been paying enough attention to it. And I wish I had, because now the PMO is turning down. So we got this really great rally. We're pulling back to the breakout point of the 200-day EMA, but I don't know. These readings are great under the surface for real estate. I mean, 100% have a 20-day EMA above the 50. These are participation numbers we were seeing on energy for some time, and numbers we're starting to see on technology. But notice stochastics dropping. Notice that we've lost a lot of relative strength here for XLRE, whereas I think XLK looks like it's still on the way up rather than on the way down. We looked at technology. Let's look at the other laggard here, which is utilities, looking similar to healthcare in a declining trend. It's lost this area of support. PMO looking ugly, moving below the zero line. And you can see participation was starting to improve, but it has dropped off the map. So not a good look here for utilities. It looked like we might get something out of this little rally here, but ultimately nothing. So not liking utilities. So where does that leave us? Pretty much looking at technology and looking at, I think discretionary still looks good. But overall, I would have to say, when you're looking at the sectors, Dad, which do you have a favorite? I think, like I said, for me, it's technology right now.
I don't have a favorite.
No? Okay. All right.
I haven't given it any thought.
Okay, we're at 9:30. I'm going to go very quickly. We're going to just flash through some of those technology industry groups using the industry summary. So it does it by sector, and then here are your industry groups. This is really, this is a go-to for me. I go to this industry summary quite often. So here we are at technology. We are looking at electronic equipment, nice breakout, pull back to the breakout point. So that's looking pretty good. Computer hardware really making a move, big breakout above the 200. You can see that the PMO is rising strongly and is not yet overbought. That means we could still see some more rally out of this internal strength. So computer hardware looking pretty good. Telecom, not really a favorite in this area, more of a sideways movement, no real breakouts. Computer services, sort of a similar look to telecom. I'm not a fan of this area, more of a sideways trading range. Yes, we have a PMO buy signal, but again, wouldn't you rather be involved in something that's having big rallies like electrical components and equipment? Big breakout, pull back to the breakout point. You can see holding this level of support right up here. This looks like a great industry group. Semiconductors, pulling back after a breakout as well. Not quite holding this level of support, but not too far away from it. The only issue here is you've got really overbought PMO here for semis. So be careful there. Software made its breakout move, pulling back. I think this is going to be a really interesting area to watch. And renewable energy was really making the move, but now it's kind of in this consolidation zone. So I'm not a real fan. And notice also the PMO turning over and giving us a sell signal, it looks like today, on renewable energy. So it may be in tech, but that's not an area I'd want to go fishing. So really, when I look at this electrical components and equipment looks good. Computer hardware is looking good. Electronic equipment is looking pretty good. So if you go into this and you decide you like a sector and you want to find some stocks within, so let's use electrical components, you can just click right here and it's going to bring up all of the stocks that are considered in that industry group. If you sort it by scooter, it's going to bring the strongest ones to the top for your industry summary. I like to actually go into the 80s. If I hold something and it moves to the 90s, that's great. But a lot of times getting involved in something in the 90s, you may be in a strong stock, but it may have already made the move. So looking here, I just hover over the symbol and you can see which ones start to look better. I think Belden looks pretty good, BDC with the breakout and a pullback. Celestica looking interesting too, but I know this one's overbought. I'm almost positive. Well, it's actually with today's pullback no longer overbought, but the PMO is looking a little toppy on this one. So that's one way you can go down and start looking for stocks.
Supercomputer or superconductor. It's up 17% today. I just thought it would be interesting to look at the chart.
And look at that. We have the flag formation that came in, a little bit of indecision here on whether the flag was going to be a good one. And then we got the huge breakout today. I imagine it has to have something to do with earnings.
Yeah, undoubtedly.
Overhead resistance is being hit. But yeah, I mean, it just is showing you that there are some really nice, there's some strength under the surface that's certainly worth taking a peek at here. Westco looking pretty good too, maybe forming a flag. All right, so that does it for me as far as the sector review and the industry group review. We stuck it out with trans technology. And so I think that's going to be a pretty good area. And I highlighted a few of those industry groups you might want to take a look at. So let's go ahead and dive right into the symbol requests.
How about let me take it for a short period?
Absolutely.
This will stop. Yes, continue. Okay. I had a question on the PMO last week or a couple of weeks ago, and I'd never answered it. For one thing, we can use the PMO as a way of ranking stocks against one another. It's a ratio calculation, so it translates. You can compare it to any other PMO and to get a ranking. Now, the normal PMO range for market indexes is around maybe +2 to -2. You can go shoot over that, maybe another point. Otherwise, stocks can go, I've seen it as high as 50, maybe even higher. So the absolute value you can compare against another stock, but you want to make sure in your comparisons, if the PMO is coming down, even though it's high, if it's coming down, it may be losing strength, and it may not really be a candidate, even if it's currently at a higher PMO. It may not be good. So that was it, and you can take it back.
Sweet. Yeah, I will also show a trick, just since we're talking about PMO and their ranges. So if you're wondering what the range might be for the PMO, so for example, you have a -2, -3 up here to a +5. So, okay, well, is that overbought? Is that, where does that stand? One of the ways you can go and figure out the normal range, is what I like to call it, of the PMO, is I just make my chart 3 to 5 years long. And when you do that, you can start to see what the normal range tends to be for the PMO. And in this case, this is for Wesco. So typically it does and has gotten up above 10, but in the typical range would be more -4, I'd say, to +4, -5 to +5. So we know that currently the PMO is at 5.03, so it is overbought. It has moved higher before, so we have to keep that in mind. But that's one way you can determine whether the PMO is overbought or not. All right, let's hit some of these requests.
Okay, ILPT.
All right. And one of the things I'm going to do a few of these times is use the 5-minute candlestick chart, because I want to help you time your entries and exits. This is a trading room after all. So I want to help you a little bit with your actual trading. I'm going to turn this one into a log scale chart, just so I can see the action a bit better. When I do that, I have to remember not to draw trend lines. You can do support and resistance lines. The trend lines on a log scale chart tend to not always translate back into an arithmetic. So we pay attention to, okay, it's a rising trend, but we're not necessarily going to measure things out using the log scale. We already know, let's see, looking at this, that the PMO does look overbought, but again, let's look and see, is it? This is a good way to practice this. There we are. So indeed, yes, this is definitely an overbought PMO. Looking at the daily chart in this 5-year version, I do see a reverse head and shoulders here that might be going on, a nice bottom. But the PMO is clearly overbought. So we know that coming out the gate. Pulling back in a big way, I could see it pulling back to the 20 and 50-day EMAs. We do have a silver cross. The 20 crossed above the 50, so that's a positive. And again, these breakouts with the pullbacks to the breakout points is a positive. So the issue with this one, I think, is going to be the fact that it's very low priced, which means it's going to be very, very volatile. This is not going to be a stock that if your risk appetite is high, then I would say you're not in a bad place. But I don't think I would be a buyer here until it got back down a little bit further, mainly because I don't want to deal with that kind of volatility. But I also want to know for sure that this rally is going to hold up, because I don't want to deal with that kind of volatility. So this looks interesting. I like the way it's pulling back, but given that PMO is so overbought and it is starting to decelerate, I don't think I would be a buyer here.
You know what? The yield on that is less. It's less than a full percentage point, and for a REIT, that's horrible. So it's PE's bad. I don't know any other thing about it, but just looking at those numbers, it doesn't look like a good. There are a lot of better REITs out there.
Yes, absolutely. Certainly better stocks. Yes.
Okay.
All right. What's next?
XOM, Exxon.
All right. So as you heard earlier, I am bearish on energy and oil and gas. So that means I better be negative on Exxon, because its capitalization and the way it sits in XLE, whatever is happening here is likely happening on the XLE chart. So I don't like energy. I would say this one's going to probably break down below that 50 and continue lower. Looks like the double top setting up here. PMO is now on a sell signal. I don't think I'd be waiting this one out for the bounce. I know if I owned it, I would be likely having my finger over the sell button, mainly because of what's going on here with the PMO. Higher top, lower top on the PMO, negative divergence going on. Stochastics dropping below 80. Relative strength, it looks like, is starting to flatten out here against the group, and the group's already doing poorly. So not a fan here of ExxonMobil. Certainly not a buyer. It could be a short candidate, honestly.
LQDA.
LQDA. Liquidia. Interesting. Pharma. Okay, so healthcare, we already saw not good. Pharmaceuticals, not bad right now. I mean, they look at relative strength wise, not very good. But we started to get some under the surface indicators on the golden and silver cross. It's not for pharma, but it is for biotechs. And even though biotechs were starting to look bad relative strength wise, the under the surface participation was improving. So I haven't seen that on pharmaceuticals because we don't have a golden and silver cross there. But I'm starting to take these relative strength lines with a little bit of a grain of salt. This one is on a rising trend as far as relative strength against the market, but it does have a headwind. This is going to be a headwind. And, stochastics looking good. PMO has kind of been not very expressive. I mean, not telling us much, but that's really because price hasn't been telling us a whole lot. Let's see, support, resistance. So there's your resistance line, support line. Yeah, I mean, it's holding that. It's not a terrible chart. I imagine it's a rising wedge though. So this is a rising wedge right there. So it's a negative formation. It's telling you to expect a breakdown next time it tests this, the bottom of the wedge. So I can't get excited about this based on where it's at in the sectors and in the industry group. It's not a great selection, I'm sorry to say.
Okay, let's move along. Starbucks.
Okay. Looks like we could end up seeing a reverse island in the positive, which means we would expect a gap up and a continuation. But I have to say, looking under the surface, I'm not so sure that's what we're going to see here. The PMO has turned down. We have a sell signal that's coming in. It looks like it came in last week. Stochastic's falling out of bed. Looks like it wants to rally and relative strength, to start to improve here. I don't know. You've got it sitting on the 50-day. It's kind of at what I would call a decision point. It's going to either hold this support and give us that gap up and move. But the PMO is it's just not telling me that that's going to happen. I don't think that I'd want to get involved here. It's below this level of resistance. It is holding the 50, but maybe I'd want to wait and see if it can continue to hold the 50. That seemed to be a great reversal point for it last time. But I mean, today's rally and that bullish engulfing candlestick is certainly encouraging, but the rest of the chart's kind of breaking down. So I don't know that that'd be where I'd want to put my money.
Okay, FNV, Andrew wants to know if it's a long-term hold.
All right. If we're going to talk long-term, we can go to a weekly, but I will tell you right now, my gold miner position is gone. Gold miners are looking very, very weak. But if you're talking longer term, I think they look pretty good. Let's see. No, this one, not so much. Franco-Nevada PMO turning down. And again, this big double top is shaping up. If I drew a rising trend line, it looks like it is probably just now breaking that rising trend. Scooter is moved into bad territory. If we go even longer term to the monthly chart, that's an ugly monthly PMO. So I would have to say, I know I don't like them short-term gold miners. And this particular gold miner isn't showing the kind of strength that would weather the storm that I think gold miners are getting ready to enter.
NUE.
Steel. We looked at materials and that group isn't doing that well, but you can see that steel, relative strength wise, is doing just fine. Starting to lose a little bit of its relative strength here, particularly for Nucor. PMO slowing down a little bit. RSI was very overbought. This pullback, I think, is constructive. Stochastic's above 80. I see this certainly as a hold. And it might be a real interesting pullback candidate, depending on how the PMO reacts. I like those pullbacks where they come back, but you don't really lose the PMO above the signal line. So that could be interesting here on this pullback. Let's look at a 5-minute. Look for entries. So what we're looking for on a 5-minute candlestick chart for an entry is a positive 5-minute PMO crossover combined with a positive RSI, meaning it's above 50. And so that tells me that we do not have a buy point because the RSI has stayed negative really all day long. I like the PMO, how it came over here. You can see in the thumbnail, went lower and then started to cook and move higher. You've got, like I said, the RSI is a problem, but if you have a higher risk appetite, this would be a nice little buy signal, seeing that second PMO bottom and this one, I'm sorry, not a second one, seeing this PMO bottom above the signal line. I think you could make a case for an entry here, but it would be a more aggressive entry because the RSI isn't positive. If you wanted to sell a stock and you come to your 5-minute PMO, all you're really looking for is the PMO to turn down. So you can see it turned down back here. That would have gotten you out right in this area. PMO turned down right about here. That would have gotten you out in this area. So it gives you a little bit of, an edge on your entries and exits to use these if you have the ability and time to do so.
CSWC.
Financial, let's see, asset managers. Looks like in the shorter term, they're losing a little bit of relative strength, but overall, not so bad. Not so bad here on relative strength for the stock against the S&P. Looks like the PMO is topping, but, considering it's had these 3 days of downside, that's really not a lot of damage to the PMO. It is overbought to some degree. We've seen it
does
hit
look
negative
good.
4.
Got a negative
Yep.
divergence there.
These tops,
Yep.
those tops. Yep. So there are problems here, but I do see why you would be interested in it on this pullback to this support level. And it is looking kind of double bottom-ish. Let's see. Let me look at this on the weekly chart. I need a little more information. Yeah, because I thought I saw a reverse head and shoulders, and I think I am identifying that correctly. Here's your head, left shoulder, right shoulder. And if we get the breakout above the confirmation or neckline, which would go right through here, which is what we have, that does suggest higher prices in the intermediate term, if nothing else. So going back, I mean, I don't think that this is a terrible possibility. There probably are better ones, but not too bad. And if I owned it, I'd certainly be holding it, see what it's going to do on this support level here. But longer term, it doesn't look too bad.
Okay. We have a question here. It's a long, a very long entry.
Let me go look, because that'll be easier. Whoa, okay. People were bearish after or before the Fed meeting. Market continues to rise anyway. Everybody's getting suddenly bullish. You know why? It's because it went over that 20% mark. That's why everybody's suddenly bullish. On the upside, most barely participated. Yeah, I know. I didn't participate in the rise like I would have liked to either, but my risk appetite is definitely low. Numbers horrendous, dealing with fire, aside from the charts. What does common sense tell DecisionPoint?
Well,
that really is, to me, that's really the question.
I'm long-term bearish still. Right now, you know, the technicals, you gotta go with them. You can't ignore them. But I think long-term, there's stuff hanging out there, like the real estate bubble. All the bubbles that I've talked about have not
burst,
deflated. So yeah, I agree that there's a problem, but right now the technicals are good, and that's what you should be paying attention to. And depending on your longer term outlook, just act accordingly.
Right. Yeah, I would say for me, common sense is I definitely, there are problems and they're going to come home to roost, but it seems like they keep coming home to roost and then they don't stay. So overall, I'm bullish in the short term. Long term, I still am bearish for sure. But you have to be nimble. You have to adjust. And with things looking like they are in the short term, I have to be bullish. The charts are telling me to be bullish, even if I don't want to be. So common sense, yes. But as my dad said, technicals, I think, are the most important. At least that's for me. So the rest of it, yes, I pay attention to, but overall, I am all about the charts, and the charts tell me to be bullish right now and even into the intermediate term. So.
Okay, 3 minutes left.
3 minutes. Let's see what we can do.
KWEB.
KWEB. Okay. All right. Ugly. This is my first big rounded top, holding support at the 50, but negative RSI, PMO falling out of overbought territory. I don't need to spend a lot of time on this chart because I don't like it. Certainly, like I said, it's on kind of at a decision point. It's sitting on support, but all of the technicals underneath tell me it's going to break down. So I'm not a fan.
CPB.
Campbell's Soup, I believe. All right. Consumer staples looked bad. We didn't look under the surface at food products, but I can tell you, I know relative strength is terrible. And I said that before looking at it. I know that this is a bad area of the market. Notice relative strength also failing for Campbell's Soup. Looks like we might be getting a little bit of a double bottom here. And the PMO is very oversold, and RSI moving up. But I think that it has a lot of headwinds to deal with people not being interested in staples right now, with being in a group that's really struggling. This does look pretty, it looks interesting. That is for sure. Let's see, what's the next level of overhead resistance is about 2% away. If this does turn into a double bottom, that would mean we get a rise about that much. So bring us up to here. So really, I don't think the upside potential is there to get involved with this one. The next level is less than 5% away as far as resistance. So not a huge fan here, just mainly because of where it is, but the chart doesn't look terrible.
1 minute.
All right, 9:59. We do have to wrap it up. Feel free to send your questions to Erin at DecisionPoint.com. We would love for you to come check out our website. Let me give you a quick peek here. So we've enjoyed having you here, but we would love for you to come check out our website. We have subscriptions for the Decision Point Alert, covers the whole market. Diamonds gives you 10 stock picks per week, as well as an extra Diamond Mine live trading room. So check us out, see if you'd like to try us out. And that is all we have for today. So I will stop my share and wish all of you a very good trading day and a very good trading week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.